What is up, guys? Welcome back to my channel, GG FOREX. On today's video, I'm going to show you how to do the T-wave strategy. The whiteboard is out, guys, right? Okay. I didn't break my teeth this time, this is great. So, what is a T-wave strategy? The T-wave strategy is a trend-based strategy. So what that means is, the market is either going to go up, that's as best as I can do it, up, or it's going to go down. What we don't want for a T-wave strategy is the sideways market. There's obviously been called ranging markets, all that other stuff, okay? So we don't want that. We want either the market to be going up or the market to be going down, just because the strategy is way more effective that way. So now we know what market conditions we're looking for this strategy to work. What we also need is an indicator. Now, why is it called a T-wave strategy? It's because it looks like a T. This is what we're looking for. We're looking for a big T. So let's say the market is going in a bullish direction, so it's going up, it's going like that, do. What we're looking for on these high-low bars, and what I mean by high, low, open, high, low, close bars. Jesus Christ, that's hard. So, well, let's show you an example of what that is. So the bars we're looking for is what we're going to in a computer in a second. Is if the price opens here, it goes up, it goes down, and then closes here. So that's open, high, low, and then close. So these are the bars we're looking for. These are the indicators. This is not an indicator, but this is a bar in length, just to give you guys an idea of what the hell's going on. So now we know what a high, low, close bar, open, high, low, close bar is. What does our open, high, low, close bar need to look like for it to be a T-wave strategy? Now, as you guess, it's probably gonna look like a T. So we're looking for high T's or low T's, or high tests and low tests. So let's say the market is in an upwards trend and we're going through phases. So the market usually works in phases. So the best way I can draw this is, let's say this is our trend line. It's going up and the market is going to go like this, and it's going to have a pullback, and it's going to go like this, and it's going to have a pullback. This is generally how a market does. And obviously if it is a downwards trend, it'll be going like this, a downwards trend, and the market will be going down, have a pullback, and we're going down, and have a pullback, like that, okay? So that's basically what the markets are doing. This is what we want to look for. We want to look for phase 1, P1, and this is P2, and this is P1, this is P2. So phase 1, phase 2, phase 1, phase 2. What we want to look for in a T-wave is the end of phase 2 and the beginnings of phase 1, and the indicator for the T-wave is going to show us when the start of that phase 1 could potentially be. So, I lost my clock. So, now we know it's a trend-based strategy. It works up, going up or down. It's at the end of a phase 2, the beginning of a phase 1. So now we know that. What is the indicator? What is the OHLC bar going to look like? So if we're at the end of a phase 2, so it's gone up, phase 1, phase 2, and we want it to go back up again, what we need to look for is going to be more like this. Okay? So what does this mean? It means, so what we're looking for target-wise is to get in around here, because we want to catch the start of phase 1. So what this means is, the bar is opened here, the sellers or the buyers that come out has drove the price up a bit, and then it's it's gone up a bit and it's drove the price all the way down, and then the buyers have come back in and drove the price all the way back up again. So technically there's loads of arrows like this. So it's opened here, it's had highs of this, it's had lows of this, and it's closed here. So to me, what this means is, it's opened here, the sellers have come in, they've drove it down, and then buyers have regained control and has pushed the price back up to where it opened again. So this means that this is potentially a sign for a start of a phase 1 move, which is what we want to catch and carry up on. So hopefully, what we want to look for is, so we've got this, got our high test bar here. What we want to do is I need to have more colours, but we want to have our buy entry. So I'm going to B, E, buy entry here. We want to put our stop loss there, a stop loss line here, and we're going to have a take profit up here somewhere. So it's going to be a 1-to-1 reward to risk ratio. We're going to be risking 2% on the trade. Obviously you don't want to risk any more than 2%. And that is basically the T-wave strategy. So if it was for a downwards market, the T we'll be looking for will be a low test. So that means it's opened here, the buyers have come in, drove the price up, and then sellers have regained control of the market. It's drove the price back down, and it's closed here. So that'll be an indicator for a downwards trend, but as we're focusing on this example, on an upwards trend, this is what we're gonna do. So let's jump in the computer now in Smartcharts and show how that looks like for real. Okay guys, right, we've jumped straight into my computer. Right, I've found a T-wave strategy that I like the look of. It's the New Zealand dollar against the US dollar. So how to get to this chart on Smartcharts is you click the top right where it says T-wave, or say no strategy on your one, and it will give you all the strategies that are going on right now. And what Smartcharts does, it finds the ones that are working, particular strategies for which currency pairs or which time frame of charts, all for you, so you don't have to scroll through hours and hours and hours of bloody charts just to find a strategy, and then maybe you might be missing opportunities everywhere. So Smartcharts does all of that for you. It says, right, the indicators for these strategies to work are working right now. It hasn't crossed the buy entry line or the sell entry line, take the trade. So we're going to use our technical analysis to make sure the system is right. So I'm going to go on New Zealand dollar against the United States dollar. And as you can see with our phases, so this is phase 1, phase 2, phase 1, phase 2, and this is halfway through phase 1. So what I want to do is look for that T wave indicator. So let me just zoom in a little bit, use the grab tool. So this is our T wave indicator. So we've got it opened here, the sellers came in, it pushed the price down, and then buyers regained control and pushed the price back up again. So this is leaving us a classic T-shaped wave. So what we want to do is have our stop loss just 1 pip below that T-shaped wave, our buy entry just above that, and our take profit is up here, as you can see. So it's a 1-to-1 reward to risk ratio. And also what you want to check is your moving average lines is the 8 above the 20, which means it's a bullish trend. So let's have a look. The yellow line is the 8. The yellow line is the 8. The blue line is the 20. So this is showing as a bullish trend. Another thing we can do to test this move is a 4-hour chart. It's just to check the higher time frame. A lot of traders forget to check the higher time frame. Let's check the daily to see where it's going. And as you can see, it's come down, and it's so far is going up again, so it's showing it's a bullish trend, so that's good. Let's go back onto the 4-hour chart where the strategy said it's going to work the best. What else can we check for? Another thing is the news. Now, another thing that Smartcharts does, which is very helpful, is when the news comes out, people tend to like shit themselves. Basically, they make rash decisions, or they try and guess what's going to happen just because of the market. So let's just go on my crosshair tool, and what the rule of thumb is don't trade 2 hours before news release and don't trade 2 hours after news release, because the market's become very volatile and you don't really know what's going on. So at the moment it's saying it's 12 o'clock here, and the next news release is at 8 o'clock in the morning tomorrow. So that's fine, we can place this trade, the news isn't going to affect us, it's not going to send it in a crazy direction where we're uncomfortable, or it's not predictable. So let's go back onto the grab tool and zoom in a bit. So right now our stop loss, if I click, see this is saying glowing green, so that means you want to do a buy entry here. So I'm going to click the green buy symbol. It's a 2% risk, so it's automatically placed for me. As you can see, the stop loss is 1 pip below the T wave, the buy entry is 1 pip above, and the take profit line is just up here. Now, as you can see, it's done the calculations for me. It says a 44.8 pip move. Let's just call that a 45 pip move, with a total profit gain of £842, or a profit loss of, well, a loss of £842 as well. So it's a 1-to-1 reward risk ratio. I'm happy. It's 18.8 lots at 2% risk, so I'm happy to place this trade. So all I need to do now is click the little green button, and until this line here triggers this bit, the trade is on. So fingers crossed, with our analysis that we've done, what I've taught you, this trade should come out. So guys, thank you for watching that little video. The results of that trade will be on my social media, so it'll be on my TikTok, my Instagram, and my Facebook page. And yeah, so any little snippets from these videos I condense down into like 1-minute videos just to give you guys a little idea of what's going on. But I hope you enjoyed that. I hope you found that informative. And if you have Smartcharts, I'll leave or you do want to get a free trial Smartcharts, all the links will be down below. But yeah, I hope you enjoyed that little T-wave strategy, and if you implement it, let me know how you guys get on with it. And yeah, hope you found it very helpful. Thanks for watching, guys. I'll see you on the next one.